This week's newsletter talks about refi booms, loan limits, and the mortgage rate misdirection. As you may have noticed, rates have actually ticked up a little bit following the Fed's decision to cut rates by 50 basis points a couple of weeks ago, which is not terribly, it was kind of expected a little bit that we could get some of this because a lot of the rate reduction that we saw had already been priced into the market. And so now we've just got the normal issues going on in the bond market. The newsletter talks about refi booms and what's going on, and you see this huge spike in the MBA refi index, but there's a great chart in the newsletter that kind of gives it a little bit of perspective that shows how this recent spike in refi volume compares to the spikes historically, and it really is just nominal at this point. That said, it's always good to have more volume in the marketplace. And I do believe as rates continue to improve, and I do believe they will over the balance of this year and into early next year, we will see a substantial spike in rates, a substantial spike in refi volume over the balance of both this year and into early next year. And this is really setting up for an outstanding purchase season next spring. And so I encourage everybody to take a look at that. In addition to that, it talks about loan limits. You've seen a lot of lenders come out with increased conforming loan limits. To be blunt, it's all a guess. They're guessing. There's some math behind it because the FHFA uses the same mathematics each time that they change the loan limits. It's expected that the new loan limit is going to come out right around $800,000, maybe slightly higher than $800,000. You've seen some lenders come out at about that level, some come out slightly higher. They're just basically taking a risk, and if they can't sell those loans to Fannie or Freddie, they'll sell them off into the non-conforming markets, but it gives them a chance to pick up market share along the way. So that's what's happening there. And then last but not least is obviously just the rates, and there's a lot of charts and suggestions as to what's going on. Last week's data was really kind of a non-event for the most part. This week is going to be all about jobs. We've got the JOLTS report, we've got the ADP report, but on Friday, on the 4th, we're going to have the unemployment number and the job creation number, the non-farm payroll number for September. That's going to be the most significant number of the week, so I encourage you to take a look at that. I'll see you on the road, and I wish you the best this week.